talking about this key inflation driver. My name is Les and I'm Chief Analyst of BG Trading Australia. Today is 29th of May 2024 and I will be providing you with an overview of the S&P ASX200. I'm also going to be talking about the latest released inflation numbers, which was higher than expected. How did the market react? And also, what are the sectors that could benefit and not from this higher than expected inflation? Finally, I will be talking about one key inflation driver that I haven't seen much of talk at all in the media or even by other analysts as well. Let's have a look. Just want to remind you, this is not a financial advice, just as from BG Trading, sharing with you how we apply BGS20 strategy together with our VP members to know when to buy and sell stocks to chase 20 to 40% within 1 to 3 month time. Obviously, using our strategy, we not only know when to buy stocks, but also we set targets, lock in profits, and move on into another position. I also like to invite you to become a member of a free Facebook community, Buy, Grow, and Sell Strategy for Share Traders, or simply follow our page, BG Trading, on Facebook as well. And I would like to share with you the key elements of this, and it is very important, especially if you are investors or trading into different sectors of the market. Today's higher than expected inflation figure could directly impact within the short term until we see the next month. This month inflation, and you should understand the impact of high inflation within the overall stock market. So the key thing today, the annual inflation has increased to 3.6 this month, up from 3.5% in March. This marks the highest level in 5 months and is above the market expectations, which they're expecting to fall to 3.4%. So essentially, what does it mean for stocks? Let's take a look at the S&P ASX200. That's also an update of the top 200 index. So essentially, what I see here is that the uptrend that we saw over the 2 months of the last year, 2023, which started in November and went all the way up to April, has lost steam, which means it is in what we call consolidation phase and is moving sideways. As markets around the world are hitting its all-time high, ASX200 struggled to break out this so-called hypothetical resistance level of 7,900. So essentially what we wanted to see is a breakout of this resistance level. We haven't seen that yet. In fact, what we're seeing is a RSI, which is relative strength index, moving down, which shows what we call a bearish divergence, which is not a very constructive or a positive indicator. That shows that since December, which was probably 80% of the rally that we had, we have peaked and now we're losing strength in the market. The upside, the uptrend is losing momentum. And that means we could potentially see the market move sideways for a little while as we failed once again, that's the third time, failed to break out the resistance. Could see the market moving sideways and even potentially testing levels, what we call sub 7,600, under 7,600. In fact, using BGS20 strategy, what worries me here is that the SMA, the long trend moving average of 250 days, one of our key indicators, shows that the market's trading in a much stretched position, which is not very good, which could eventually trigger a sell-off, and we could see the market testing these levels here, which currently sitting around 7,400, and then that is obviously being a bearish. At the moment, it's moving sideways. There is a channel here which is pretty much around 7,560 to 7,900. We could see the market bouncing there, but the worst case, the bearish case, we might see a test here, especially if interest rates hikes happen next month or within the following few months. What we really need to see is lower inflation numbers. That's what we wanted to see. And that's why I brought this video, because I'm struggled to believe that this sticky inflation is yet to go away. And that brings us to the last end of the video, which is something that I found out recently, is that obviously we all know that Australia highly rely into shipping, into importing goods, and essentially what I was looking here in 2024, that we showed a containerized freight index increasing of over 54%. This is, remember after COVID what happened, the shipping containers prices went through the roof. And then there was a massive fall in 2023, but interesting enough, in 2024, we have seen that start rising again. And we're pretty much halfway of what we were at post-COVID, when we had this massive shipping constraint. What worries me is if this index, this containerized freight index doesn't come down, the price of shipping doesn't come down, then we could see inflation to surge even further and in the short term. And that is definitely something that the RBA will be unable to do, to actually address a solution, because hiking interest rates will not affect the shipping prices. That is the key problem. We're talking about a macroeconomic problem here, and then that is to do, this surge is directly related to the geopolitical tensions in the Middle East. There's nothing we can do about it, and if that keeps on going and keeps increasing once again, we might see inflation higher than expected, and not just in Australia, but in the US and across many other countries that directly rely on imports and exports, especially imports. So now, what are the impacts into materials, gold, and retail? As I highlighted here, retail stocks are the ones that will take the highest toll. And that's because, and then I even put it here in the conclusion for you, that's because the retail companies that import goods, they will be paying a higher price for shipping, and therefore the gross margin should shrink. Okay, obviously, if you look into drop shipping companies, or companies that don't have to actually effectively have to hold the stock, that could be another case. Unless obviously those companies are able to pass those increase of a freight to consumers, then they would be technically from this particular problem. So in general, we just want to be careful with retail stocks and pick the ones that has best gross margin possible. Especially because most of retail stocks has been taking a deep correction since early this year, when we first start finding that inflation was higher than expected. Okay, now let's talk about materials and energy. So generally, high inflation drives commodity price up. So generally, commodity price benefit from a high inflation because people are spending more, and even though we are having a cost of living crisis, so energy prices tend to increase as well with some of the commodities. That's sort of a general assumption for that. Obviously, this could be a particular case by case depending on which sector we're talking about. There's materials, so we have copper, we have a lithium, then we have all the other metals as well. So obviously we're talking about pretty much iron ore here, and lithium, which are the materials that we most trade, and potentially copper. So essentially, in the short term, that should be beneficial for those particular stocks. All right. Then energy. Normally, energy has mixed impact. If high inflation doesn't always means high energy prices, and that would depend, again, if you talk about oil and gas, it would depend on supply, demand. So as long as we have, if you have short supply, then obviously energy prices tend to go up. If you have high supply, then energy prices tend to go down, and that's obviously correlated to demand as well. In this case, we are sitting pretty much flat at the moment. There's not much movement going around. So this is kind of a sector that struggled to move, in fact, over the last 3 to 4 months. Most of the stocks are trading in the buying area at the moment, so oil stocks and energy stocks essentially. So you just gotta be careful that you might hold those stocks for longer than expected. But overall, if buying at technically discounted prices, then it is always a green tick, especially if they have a good outlook and fundamental outlook. As some of the stocks that we are buying with our VP members. And then gold is always positive, and that's because the long-term inflation it's set to continues to bite. So essentially, dollar will keep devaluing. That's how monetary policies work, and long-term gold supposed to be positive. So now gold is sitting just above 2,300 US dollars. It's hit its all-time high recently, and we have been trading many gold stocks that have been very profitable for us. And then, but the bottom line for gold stocks is, even if we have interest rates cut or hike, we might even see gold prices to keep going up regardless the outcome of interest rates. Because if dollar loses value, then obviously gold is gonna go up. But if inflation continues to be high because some geopolitical uncertainty and potential putting pressure into regional banks, and then the whole economy become a little bit world economy, or at least in US and Australia, start becoming a little bit unstable, then we might see gold prices still at very strong levels, which means gold still a hedge for us. So we think gold stocks are set. Most of the gold stocks that produce are set to report really well in FY24. And they're still lagging behind many other cycles that we saw those very same gold stocks shooting a lot higher than they are at the moment. But as soon as we start seeing investors, start seeing solid financial a positive financial results, which I think is going to come now in the FY 2024, in about a couple of months' time, then I'm very confident that we'll see further rally on those gold stocks, especially the high quality ones, the ones that produce gold at a very low all-in sustainable costs. So our VP members know exactly the ones that we're talking about, but if you're going to look into gold stocks, try pick the ones that are not trading at technically, actually at the formal levels. There are few gold stocks trading at technically fair price. That's the best we can have at the moment. Not all the good quality stocks are trading at discounted price at the moment, unfortunately, but a couple of them are still trading at technically fair price, and that's the one you should be picking up. And then by memory, sort of Evolution Mining is one of our favorite stocks anyway. So additional considerations, then obviously come back to the containerized freight index. So we need to see this in the prices of shipping going down again. And then that's when we think we will see inflation coming down as well. There's not much RBA can do or Fed can do in this sense right now, because these high freight costs are directly connected to geopolitical tensions in the Middle East. It's not about supply and demand. It's about having to shipping companies having to reschedule its trajectory to avoid passing into very dangerous areas and places that they used to do but no longer able to do because of those conflicts. So that's the major problem, and I haven't seen many people talking about that at all. So just keep that in mind. That's why I think inflation could be stickier for longer, unfortunately, and that could result in interest rates hike here in Australia. Maybe not. I think the market's pricing 50-50 at the moment, but what we really want to see what inflation numbers in May will come, and that will be in a couple of weeks' time. Hopefully this video was valuable. Let us know what you think about inflation, about sectors, if you agree, if you disagree, if I missed any point here. That's what we always have people commenting, so be free to put a comment in there and I will try. Actually, I will make sure I'll answer everyone in that sense. Thank you, and I'll see you in the next video. Bye.